everybody. I'd like to welcome y'all to the weekly wrap up for January 20th, 2023. 2023, man. We in here. While I let everybody pull on up, let's get the pleasantries out of the way. The normal gang, y'all know what to do. Go ahead and put it in the chat how your week went. Y'all be skipping out. Don't be wanting to share how your week went. Y'all go ahead and drop it in the chat how your week went. Let's get the pleasantries out of the way. I'm going to sit back this evening so that nobody won't have any jokey jokes. I want to sit back so no one will have any jokey jokes. Talk about I'm too close to the camera. How far can I pull my keyboard? How far can I bring my keyboard without destroying everything? That's about it right there. That's about it. There you go. Now, I can sit back and nobody has any jokey jokes about me being too close to the camera. Bring this up so I can still be, have my light together, have my light right. Yeah, man. But anyway, if this is your first time tuning in to Tim's Tidbits, allow me to say welcome. If it's not the first time tuning in to Tim's Tidbit, I still want to say welcome. And I want to give you a nice, hearty, thank you for always tuning in to Tim's Tidbit, hanging out with me and my man over here, Spidey. Y'all see Spidey over there? He's chilling by the window. Ooh. Yes. If you don't know who I am, my name is Timothy Lee Rogers Sr. I get on Algo's internet every single day, Monday through Friday. Once at 9 a.m. Eastern Standard Time. Get it right, Tim. And then again at 6:30 p.m. Eastern Standard Time. And we talk about the price action. I only trade by ICT concepts. That's my choice. So when I read through the price action, I share it in the way of reading through the ICT concepts. We also go over different economic calendar events. We talk about companies sometime, but we try to share all things stock market that just happen to pop up to help you along your journey. And we do it all for the free 99, Monday through Friday, 9 a.m. Eastern Time, 6:30 p.m. Eastern Time. Come on over here and be a part of the gang. If you haven't subscribed, please consider subscribing because we try to make it 2,500 subscribers. And the experts at YouTube said, you know why you're not making it there? Because you're not asking. So I'm asking, please subscribe. And if you are subscribed, send it to some of your friends. Say, hey, I really enjoy Tim's content. He's a little goofball. Hey, but his channel gives out good information. Come on over. You can come over. Let's go see what's going on in the chat, man, before we get into it. What's going on here to learn and share? What's up, KC? I'm your boogie, man. That's what I am. What's happening? I got to skip you. In case y'all wasn't noticed, y'all didn't notice, or if y'all did notice and y'all felt disturbed, we have an eraser liquor in the gang. There's an eraser liquor. I'm not calling any names. There's an eraser liquor in the gang. I'm not calling any names. Ignore them. Michelle Tucker! What's going on, Michelle? Hate you. Get off my line. The door right there. What's up, Lil Hawk? What's up, MC? Hey, we'll go ahead and get into it, man. If you do not know, if you're not, like I say, if you're not subscribed, if you're not part of the gang, and you don't know, today I shared actual live trade. It was an MES trade that I took live during the New York session with the Black Spider Gang. and I shared it on the YouTube page. It's in the Gems from the Live Stream playlist. I shared it on the YouTube page. It's the entire trade from beginning to end. How we mapped it out. Shout out Lil Hulk brought my attention to an old breaker. We mapped it out, stalked it, took it. You know what I'm saying? He saw the whole process. The way I be like that all the time. I be talking to the charts, acting silly. That's me all the time. I shared it for everybody out there. You know what I'm saying? I typically don't do my private trading on the public forum, but I was like, hey, let's share it for everybody to see so that people will know that this stuff really does work. And I don't want people to think that it's all about a money grab. So just want to share my true thought process with everybody. So now you can see that I walk it like I talk it. It's out there. It's on the channel right now. Yeah. How did my week? I still ain't seen nobody put down how their week went. How did my week go? My week started out a little bit rocky. Excuse me, my eye itching. Started out a little bit rocky. I was a little frustrated in the beginning of the week because I kind of got the deer in the headlights. We had a short week. Tuesday. Was it Tuesday or Wednesday when I got the deer? It was Wednesday. Tuesday didn't really I wasn't intending on trading Tuesday. We just kind of watched the price action. We were tape reading. You know what I'm saying? We were tape reading, calling some stuff out. Went pretty good. Then Wednesday was actually trying to trade, and then, you know, can't get over that mental block that I got of if I miss my initial entry, it's coming back for the retest. Still dealing with that mental block of that. So I was a little frustrated about that. Then Thursday, the market ain't really give nothing Thursday. Shout out Mendez who killed it Thursday. It didn't give me nothing. I didn't have, you know, it was one breaker. It was a breaker. No, it was a gap. It was a void that I didn't have marked on mine. And I didn't realize the market was reacting to that. So I missed that beautiful short that Mendez caught because I didn't have that annotated on my chart. I was slipping. So the market didn't give me nothing that I could see because I didn't have my chart marked up to perfection. Then today, did pretty good this morning. Took a trade this morning that I didn't record because it was pre-market, and I don't just record trades randomly. If I take a trade on the live market watch with the Black Spider gang, then those be recorded and you can see them in the playback of the videos in the Black Spider gang community tab. But I took a trade the other night. When was it? Wednesday night? That one, I was a little premature. I was a little aggressive with moving my stop. So it got stopped out in profit. So that was one. So Wednesday night, stopped out in profit. This morning. Wednesday night, stopped out. Thursday night. Wednesday night, stopped out in profit. This morning, 10-point trade. And then New York session 10 points. So three for three on the week for futures trades. And still got a long way to go on the mental side of being able to, you know what I'm saying, take that trade on the retest. So that was my week. Does anybody else have anything? Anybody? Does anybody else want to share? Anybody at all? Anybody? Going once. Going twice. Anybody else? Oh, Robert said, good week. Futures and options. Scaps and trending trades using DR, IDR with a bit of ICT mixed in for the most part. That's what's up. That's what's up. Match your trade almost verbatim this morning. Oh, you talking about the one that I took pre-market? The one that the Russells. You talking about the one I took pre-market? The one before the market opened? Or the one I well, it had to be the one it had to be the one that I just during the market. Because the one I did pre-market. Okay, yeah. So you went 39.30 to 39.50. You got you a 20-piece item. You got you a 20. Hey man, y'all clap it up for the Russells, man. Got a 20-piece out of it. Got a 20-piece out of it. Ignore the eraser liquor. That's what's up, Robinson. That's what's up. Doing your thing. Doing your thing with the DR IDR. I ain't gonna hold you. I was going hot and heavy on the DR IDR, but it's like, man, my ADD don't be letting me. I can't stay on it. It's like my mind full with ICT stuff. So it's like trying to incorporate something else. I can't do it, man. Okay, then we got Ice Cube in the house. Today was a good day. Just waking up in the morning, gotta thank God. I don't know, but the day can't stop. Yes, congratulations. Step brothers. Hey, while I'm about to go over here on Al Gore's internet, y'all go ahead and share how your week was. Congratulations, Tranisha. Y'all share how your week was. Good, bad, or indifferent. I'm going to pull up Trading View because I don't have Ninja Trader open. I closed Ninja Trader. For those who do not know, we have a very good friend of ours by the name of Spyleen. We wrote a song for it. Want to hear it go? Y'all sing it with me now. Spyleen, where you at, baby? Hey, how you doing? I'm glad that you, Spyleen, what you doing on the weekly candles, girl? What you doing on the weekly? I know why you're on the weekly candles, because I was looking at something earlier today when I was on the Zoom call with the runners. When I was on the Zoom call with the runners, I was looking at something on the weekly chart. Okay, instead of just looking at the price action for the day, because it turned out to be a typical power 3-day, a bullish power 3-day. We opened up, consolidated, manipulated, going down below the midnight open, distributed it, however you want to say it, and closed near the high, right at the high. Power 3-day to the upside. Instead of talking about that, let us look and see where we are. Let's look and see where we are. Why do I want to look and see where we are? Because we have started a new year. We're off to a great start of the year. We managed to get positive last week on the year. We managed to stay positive at the end of, wait a minute, what week is this right here? This is week 3. We have managed to stay positive through 3 weeks of the year. We are this close to a positive January. If you recall, why am I talking like this? I don't know. But if you recall, as we discussed, I think last week, I don't know when it was, in 2022, the only time the market was positive on the year in 2022 was the first trading day of the year. I think we went negative on the second trading day. We might have still been positive on the second day, but I know we made the high on the second trading day of the year, right? And that was and we went down from there. So the second trading day of the year, we made the yearly high, and then we went down from there. And then we made the yearly low on October 13th and bounced. And we came very close back to equilibrium, but we could not make it. Matter of fact, if I'm not mistaken, I think our box top that we've been trying to get back to since we hit the low over here on the 13th. This is the weekly candle. This says the 10th. Ignore that. When we bounced here and tried to get, I think this box top is very close to the yearly equilibrium. And then we ended off the year over here off the lows, about 19 and something percent. And week 1, week 2, and now this is week 3. We have managed to stay positive for 3 weeks in a row. We were positive week 1. We were positive week 2, right? Week 3, we did close down, but we're still positive on the year. Even though we closed down, this is a very bullish candle. Even though we closed down from last week, we got a lower close, but this was a very bullish candle. So it was a negative week, but we're still positive on the year. Let's clap it up for some good news, man. That's some good news for people who don't trade like options and futures. That's some good news for people who just, you know what I'm saying, buy, they dollar cost average in, they buy shares, they swing shares. They only make money when the market go up, right? So only make money when the market go up. So if you started investing or started doing anything, right, just say mid-October, you're okay right now. Clap it up. You feeling all right because the market has been showing you some love, right? We need some good news because we've been falling for a year, right? So let's verify that beginning of 2022 real quick before we move on. Yes, we were only positive. Wait a minute. Let me change to days. That's the week. Y'all saw that negative week. So 2022, yes. So we were positive for 2 days, right? The year was positive for 2 days, right? The first trading day, we ended positive. The second trading day, we gapped up and ended. It was a negative day, but we ended positive. Looks like we closed above that closure. Nope, we actually we ended a little down, but we were still positive on the year. So the first day we were positive. The second day it was a negative day, so we ended a little bit down, negative 0.03%. If you look over here at the thing, negative 0.03%. And then the rest of the year it was down, baby. Your street in a Range Rover. So we were negative on the whole year. Speaking of the year, let's go to the yearly candles and see where we are in the long time frame, right? So we're coming up. As y'all see, the market is predisposed to going up. If you just look back over all the years, right, from inception, the market is predisposed to go up. These yearly candles, right, predisposed for going up. We have some down periods. but it's predisposed. It's been more green than red, as you can see, right? Coming over here where most of us got introduced to the markets, right here. This year here with this long bottom wick, shadow, tail, whatever you want to call it, right? This is 2020. This is when most of us got introduced to the market. This is when most of us got spoiled to think the market only goes up very, 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 very fast. And then 2022 disappointed us, right? So what did we actually do in 2020 from a technical standpoint, right? In 2020, right? In the beginning of the year, we died. Came down. Where do we come down to? Right? We came all the way down here to this, past that one there, got down into this one here. Right? All the way down into, and what is that? That is consequent encroachment on a yearly fair value gap. That's what we did in 2020. We came all the way down. We died. COVID just, market just, the market crashing up. We came all the way down to a yearly fair value gap, and we hit consequent encroachment. And then we reversed. Pow! Took off. Because this was like March. In the March, we died. Right? March, we died. And what it was like over about 12, 13 days, maybe 15. It was just like quick. All the way down. All the way down, all the way back up. It was real quick. Right? We died. Right? Came back up. Pang out. And then when we pang out, so between 2020 and 2021, we dipped down a little bit. Pang out again. So when we got that pang out in 2021, what did we do then? What in the world is that? What did we do then? We set another yearly fair value gap. If I did say fair value gap down here, I'm sorry. That's a fair value gap, right? So 2020, after we got that crazy reversal, I think probably the shortest bear market in existence. Don't quote me on that. Ask somebody who knows. We set another fair value gap at the end of 2021, right? So 2020 candle gave us a fair value gap, right? Where do we come down to? Almost to consequent encroachment. If anybody who don't know what I'm saying consequent encroachment. That's 50% of the fair value gap. That's what ICT calls it, right? So in 2022, when we died for that entire year, in October, we made the yearly low, and that yearly low was right around consequent encroachment. And then we reversed, right? We were trying to get to this right here is the high that we was trying. This was the September high. This was the September 13th high, October 13th low, right? We were trying to get back to that September 13th high. Inside this month here, see the little red eye? The red eye still needs some Visine, right? Thought we was going to make it with the Santa rally, but the Santa rally turned us around. And we came back down. I'm going down. So went back down and ended out December right here, pretty much at equilibrium of the dealing range between September 13th high and October 13th low, right? That's where we closed the year out, right around equilibrium. And what do we say about equilibrium? That's the spot when the market feels like this is fair value. You're not in a premium. You're not in a discount. So the market ended the year right at fair value, right? So that's looking at the yearly candles. And right now we're up 3.52% on the year. Clap it up again for being positive on the year. 3 weeks. We've been able to stay positive on the year for 3 weeks. I think the Dow, on the other hand, I think the Dow may be negative on the year, right? But the SPY, we're up. We trade the SPY. We trade SPY lean. Tim, why you walk through this instead of talking about today's price action? Because when I do my weekly chart, my weekend chart prep, I only do it with the channel members now. So I'm just going through the price and looking at the overall price with everybody, so no one feels left out, and no one will be left out, and no one can say, hey, it's just a money grab. He's only giving the good stuff to the people that's paying. I do it for the free 99. I do respect and thank y'all for supporting the channel financially. Even though YouTube take their 30%, I still appreciate you. I got to pay taxes on 100%. They only give me 70%. Let's go to the weekly. Let's go to the weekly candles. Oh, the monthly candles. I'm sorry. So, on the monthly level, right? Look at what we did. So, in January, right? In January 2020, notice them 3 months. I'm like, wait a minute, that's not right. 1 month. There you go. Monthly candles, right? So March. So January, little down. February, lot down. March was a lot down. So over this quarter, the first quarter, we just died, right? I said it was like 2 weeks. Yeah, maybe I was wrong. Might have been longer than that. But over the first quarter, we died, right? What do we said we did, right? We did. So all of that downside in 2020 happened in the first quarter, right? January, February, March, right? It all happened in the first quarter. We came down here to this yearly fair value gap, came down here to consequent encroachment of this yearly fair value gap. And this is how you can see how this stuff is fractal, because when we came to consequent encroachment on this yearly fair value gap, if you look over there, there's a monthly fair value gap right there. And if you pay wee bitty attention right here, just like that, we came down and we kissed that little booger and took off. Pang-ow! Quick little pop back, because when the market getting ready to go in a certain direction, it's going to go the opposite way first, 9 times out of 10. So we came down, reacted heavily off of it. Hey, I'm ready to turn around. This is a stop run. We ran stops up under this low right here, hit this discount PD array, and we had a strong reaction off of it. Now we're ready to go back the other way, right? The market, then it gapped down, right? Gapped down, going the other way. Oh, I thought you was ready to go up. It went down, poked down a little bit more, and then pang-ow, gone. Month after month after month. Small little verification check at the breaking market structure. Came up, breaking market structure, pulled back for 2 months into what? A fair value gap and a void. Filled the fair value gap and the void. And then pang-ow, took off again. Another breaking market structure. You see it. It's going. We go up, we go up, we go up until we get to 2022. Then the market proceeds to come down, right? come down. Now, pay attention to what we really did that year in a broad spectrum. It was ugly. It was nasty. Let me hide this stuff right here. It was ugly. It was nasty. It was painful. People lost their shirt. All of them 2020 millionaires fell to the wayside. Fell to the wayside. They was gone, right? What did we really do? This is the yearly fair value gap that we made, right? If you look inside here, right there, we have a smorgasbord, if you will, of PD arrays. Not really a smorgasbord, but a few. Look inside here at the top of the yearly fair value gap, right? We have a monthly fair value gap, right? We got a monthly fair value gap. And just below that, touching the monthly fair value gap, right? We have a monthly order block. It's a 2-month thing, right? 2 consecutive down close candles. We got a monthly bullish order block, right? So you got a yearly fair value gap. Let me name this in case somebody want to get a screenshot. Bullish. First time I ever typed year on a PD array, right? Right. So we got a yearly fair value gap. Inside that yearly fair value gap, we got a monthly fair value gap. Why doesn't that say month? Monthly bullish. Save, yes, override it. Right? So, and inside there, we came down. And then in June, when we made the first yearly low and we got this nice bear market rally right here, everybody and their mama, including little Timmy Rogers, was like happy. The bottom is in. The bottom is in. Oh, thank you. Right? What do? We came down to the yearly fair value gap, right? A monthly order block. Copy this. Came to a monthly, or you can look at the entire candle if you want to, right? When it's a small little candle like that, you can look at the entire candle, or I like to look at just the body of the candle because that's where the most volume and activity is, right? So we come down to the yearly fair value gap, and then look at the body of the candle. Totally respects the monthly order block, right? The next month in July, when everything took off, we came back down to just below mean threshold of the body of the order block, and pang, we take off. Everybody's excited. Everybody's happy, right? Next month, August, we come in. We're taking off. We're going. No, we're not. We just poked above this high right here and turned around and came back down, ran some sell side liquidity and closed right inside the monthly fair value gap that's inside the yearly order block, right? Then what did I say? What price like to do when it's ready to go the other way? It likes to go in the opposite direction, right? In this case, it's going looking for a discount PD array. And what's the discount PD array went to? It went to the order block. The order block did its job, and then price reversed. Came up. Then we came back again in November, came back down to where? What is this right here? What is this right here? That right there was a previous order block, right? That was a previous order block. So after we trade through the order block and go back, right? After we trade through the order block, go back, it's going to transform into another thing. Sometimes might be a breaker, might be a whatever it is. But once you trade back through it, they tend to act as what? Support. Because we've gone through it both ways. We came down, went through it, went back through it, went through it, went back through it, came back, sat on top of it, it's support. Came over here in December, came down, end of the year, right on top of that order block right there, that monthly order block right there at, what did we say that was? Pretty much near fair value, right? Pretty much near fair value on the time frame that the algos are trading in right now, right? That algos are trading in right now. That September high, this is the August high, that September high and that October low. We got in sync with the algorithms before. We know that's the area they've been in sync in. And it's pretty much around equilibrium right there. Close enough for government work. Right? Right there. See that there? Right there. 379.92. Right? Right around here somewhere. 379.92. Right around there somewhere. And that's where we closed at. Close enough for government work. On the ES, it's like right there. Spot on. Spit on. Right? Now, let's go down to, oh yeah. Looking at where we are on the monthly right now. We're just talking about the price. We're just looking at the price from a technical standpoint. Okay, so on the monthly level, what are we doing? Looking, inspecting it closely. As we came up from October into November, right? We created a volume imbalance right here, a monthly volume imbalance, right? Bullish volume imbalance. We traded down, went through it, hit the monthly order block end of December just below the volume imbalance, right? So we got the wax on, the monthly wax on, and now here in January, we've proceeded up to get the monthly wax off, right? So we've traded down, we've traded back through. We've offered the sell side, we've offered the buy side for this volume imbalance right there. Waxed on, waxed off. We got bodies filling that area to the sell side, to the upside so far, right? In this month, so far, right? If we close January above 395.88, then this volume imbalance will be balanced out, right? It'll be balanced out. So, and we came, coming back down, looking at this right here, we also came down to the mean threshold of this order block right there. When we stopped and pushed back up, we stopped at the mean threshold of this monthly order block in December. Because if you look at the body of this September candle, mean threshold is 374.97, and the low of December was 374.77. So that's right there at the mean threshold of this September candle, right there at this monthly order block. So we got confluence on top of confluence on top of confluence on the monthly level to hurt stop price in its tracks and turn us around. Turn around. Every now and then you get a little bit closer. Looking at the weekly, right? Looking at the weekly. We're zooming in more and more and more. Where are we on the weekly? So let's start at the beginning of the year, right here, right? At the beginning of the year, what does the market do when it want to go up? Goes down first, right? So at the beginning of the year, we came down, did not take out the sell side, right? Respected this order block right over here, this weekly order block. We respected the weekly order block, right? We pushed up. When we pushed up, we totally disrespected this weekly fair value gap right here, right? And what I mean by we totally disrespected it, Let's mark it out. See right here, this is what I say this was? I should have marked it. What was that on the monthly level? Volume and balance. Volume and balance right there. And we made it with November. So that's a volume and balance. Change the color of that. Right? So we made it in November. So the end of November. So that's the end of November there. So this is when we made the volume and balance right here. Then we came back down through it and we traded back up. Right? Remember I told you about the wax on, wax off. Right? Wax on, wax off. So now, look what we did on the weekly there. Right? Look what we did on the weekly there. On the weekly, we came down, waxed on the monthly volume imbalance, right? Offered the sell side, came down here, respected this weekly fair value, order block, wicked up off of it really good a couple times, offered the buy side, right? For the volume imbalance. Traded both ways there. The body of it respected the top. Traded both ways inside of it. And then look what we did on this week we just had. We came down into that volume imbalance. What did I say price likes to do when we get the wax on, wax off? Right? It's either going to act as support or resistance. Right? If we get above the PD array, and we've offered buy side and sell side, it has the potential to act as support. If we get below the PD array and we've offered buy side and sell side, it has the potential to act as resistance, right? So on the third week of January, what did we see? This volume imbalance acted as support. And what reinforced it to act as support? If you look inside there, what is this in between week 1 of January and week 2 of January? Inside this bullish volume imbalance, remember, we got that from the monthly. We can't see this is a bullish volume imbalance that we made back in 2022 between November and October, right? Inside that bullish monthly volume imbalance that we just came down and did wax on, wax off over these weeks here, right? And between those weeks that constituted, right, some monthly candles, because inside here you got a monthly. There we traded both ways on November, and then we traded down through it in December. So now we got a nice amount of monthly candles. See this November monthly, traded through it. This December, there you go, you're down, all of that. So we got a nice beefy monthly candle with the wax on and then the wax off in January. December, January. It's the December candle. This the January candle, right? So if we look inside, I'm making all this up on the fly. So if it don't make sense, or if I seem like I'm all over the place, I jalapise. Look inside that. Hate when it does that. If you look inside that volume imbalance, you will see a weekly volume imbalance. Weekly. I hit monthly, weekly, that's not going to move over. So let's go center him. Okay, so inside that monthly volume imbalance that we got the wax on, wax off, this week, when we came down, what did we do? We came back down into this monthly volume imbalance that we got to wax on, wax off, that was going to act as potential support. And we ran into a what? A discount PD array in the shape of a weekly volume imbalance. So we got confluence here on the volume imbalance tip, right? On the volume imbalance tip, confluence there. And then we got the what? The reaction off of it. That's why when you heard me talking before last week, I was like, when we get to this area right here, keep your head on a swivel, because when the market wants to go in a direction, it typically goes the opposite direction first to a PD array, right? So that's why I was watching for this order block, right? I was like, I'm watching this order block right here, which is a weekly order block. I'm trying to see if the market wants to come test this weekly order block. This is a bearish order block. I hit monthly. I jalapaz. I want to see if the market wants to come up and hit this first and then retreat down, or does it want to come down first and then proceed up? And the market decided to come down first and started to proceed back up. Now that we've hit that, let's go down to the daily. That's the weekly. Let's go down to the daily. On the daily tip, right? So we can see it good. We can see it good, right? So, as you all know, we consolidated in this area right here forever and ever. I will always consolidate. We consolidated right here forever. Where did we consolidate at? Right? Where did we consolidate? What did we say about the PD arrays? Right? The PD arrays right here. So we went up, and right there is when we set this monthly volume imbalance. This was the candle that made the high of the monthly volume imbalance, right? This November 17th, right? So then when we came back down in December, we got the wax on of this area right here. We got the wax on, right? And then look, it acted as resistance forever. And notice what happened right here on December 22nd. What happened on December 22nd? This order block that we made, this monthly order block that we made, let's go back up. Let's go back up. We made that monthly order block, right? Come here, stretch it out, stretch it out, stretch it out. Remember this order block we made way back here? And get out of my way, ads. We made back here in January 2021. That's the order block right there. When we came down, went through it, respected it, went through it, respected it, right? So down, so up, right there. Acted as what? Support, right? Came down here in December, acted as what? Support, right? Now let's go back down to the daily. Remember, in December, it acted as support. So what happened on December 22nd, right? When we hit the resistance, December 22nd, that same day, we went all the way down to this support, back up to this resistance, right? Then now we're just chilling in between. Hit it again, resistance, right? If I'm not mistaken, that'd be like some kind of top, some kind of triple top, quadruple top. That'd be some kind of top. But I don't trade mannequin body parts, but it's something. resistance, right? So we come down, and then we finally get a breakaway move. We finally break away from the consolidation on January the 6th this year. We consolidate. We got there on December 16th, and we finally broke out of that area on January the 6th this year. Broke away with some aggression, right? So with that aggression, we see we have a volume imbalance here, and we have a fair value gap right there, right? When we break away from a consolidation area, right? If we move with enough force, we're expecting that fair value gap that's made when we leave, right? Bullish daily fair value gap. We're expecting this fair value gap right here, right, to act as what? A breakaway gap. Right? We expect that to act as a breakaway gap. Right? Because we leave with such authority. Shout out to homie Zay. The homie Zay be talking about the coil just winding up. We're right here. Shout out ICT. He said we're generating liquidity. We're over here engineering liquidity, should I say, right? And then we break away. So from the 6th and the 9th, right? So this Friday and this Monday, right? We pushing up with force, right? We close up to the high, we gap up, push up high, and then come back down, right? Creating the fair value gap. So this is a lot of aggression coming up. So we're expecting this right here to act as a breakaway gap because amount of energy that we left that area, right? And as we come down, we dip into the gap, and what happens? Pang-ow! We take off, right? So it's acting as a breakaway gap right now, right? It's acting as a breakaway gap. Where do we go? We come up here, fall short of this weekly order block. Remember, that was the weekly order block we had up there. Boop, right there. Let me get all this stuff in here so we can see the names. So we want to see the names. Let's see. Yeah. Get it over here so we can see the names. Don't worry about that because we ain't went back down now. Okay, so get this back right. There you go. Okay, so we come back down. Where do we go? Fell short of this weekly order block, right? Just kissed it, right? Just kissed it. But what do we do in the meantime? Right? On this leg up, we filled in this daily full gap, right? Let's mark it out. I know I'm getting a lot of junk on my screen, but just want you to understand how much stuff is in the road. I have nothing for a void. Let's just pick something. Pick. This right here is a true liquidity void. That's a true liquidity void because there's nothing in there. There's no price traded in their space. So that's a true liquidity void right there, right? So we got that liquidity void. You got this liquidity void here, right? That liquidity void there. And then we got a fair value gap. We got a lot of stuff that we left coming to the downside. Right? Bearish fair value gap. We got a whole lot of stuff that we left coming to the downside. Right? What else? We got a fair value gap over here inside this weekly imbalance. I got too much marking, so I'm just going to leave that like that. So remember, it's a fair value gap inside that weekly imbalance, right? So on the way up, we came up. We got the wax on for this liquidity void, right? This full void. We got the wax on when we took off, right? Came back down, sat on top of the void. The next day, on the 10th, came down to the bottom, filled in the liquidity void. What is that inside? Remember that monthly volume imbalance that we made well over here in October, between October and November, I think it was, right? What is it still acting as, right? What is it still acting as? It came down, touched the very bottom of it. Pang-ow! It's still acting as support. Why is it acting as support? We got the wax on, we got the wax off. Came back into it, it supported price. True support and resistance. Pang-ow! We took off. Came up, went inside the void here, right? Got the wax on, wax off both ways on that. So now that area has the wax on, wax off going both ways. Got to almost the top of the fair value gap, right? And then what do? We gapped way down below the void, below the fair value gap. Then look at that. Cut through it like butter all the way to the top. Why did it slice through like that? Because we got the wax on, wax off for the entire fair value gap and void. So we got it's traded both ways through the entire section, right? Except for this little bit at the top. And once we got up there, we poked up there and traded both ways. So now that whole fair value gap and void got the full wax on, wax off, right? Now it's all balanced out. If the algos need it for support or resistance, they will use it. If they want to get to a different PDub rate after it's balanced out, look what they do. Cut through it like butter. Butter. Cut through it like butter. Where did it go? It went down here to another void and volume imbalance right here that we made on the way up. This right here is a bullish liquidity void and volume imbalance on the daily right there. So the bottom piece from the low of January the 11th to the high of January the 10th, that's a full liquidity void, no price being traded in there, right? And then, you know, the volume imbalance, body to body. Give me body. Going from body to body. Give me body. So we got a volume imbalance and a liquidity void. When we cut through this fair value gap right there, when we came up and we kissed that weekly order block, we kissed it. And then what do? We quickly melt it down, right? Where? To this volume imbalance, right? Came down. Almost, we got the consequent encroachment. We got halfway there. The next day, we gap down, right? Where do we gap down to? Inside this weekly volume imbalance. Weekly volume imbalance. And where do we go? Down here to this daily void. This daily void. It stopped at this daily void. And guess what? It reversed. Why did it reverse? Another little gem from the ICT concepts. Whenever you go to a premium PD array and get a reaction off of it, what is this premium PD array that we reacted off? It's a bearish weekly. It's a bearish order block from a weekly. Whenever we get a reaction off of a PD array on this time frame, you can expect, and it will be highly probable, that it will deliver to a discount PD array, meaning somewhere below price, one level down. So you came from this weekly order block, cut through all of this balanced out price range, everything balanced out, the fair value gap, the liquidity void, the full void, everything balanced out, cut through it, paused at this daily. Is this the daily that we want? We came from a weekly. Is this the daily that we want? Gap down the next day because of something, right? We're over here at this daily order block. Is this the daily that we want? Poke down to where? A daily liquidity void that's already been taken care of. That's going to be support. Where is that at? Right here. Once we broke out of the consolidation, so you have a break in market structure. You got a discount daily order block, right? You got a discount daily liquidity void that is support now. And we came from a weekly order block. So you're coming from a weekly down to confluence of daily discounts. Weekly premium, daily discount, daily discount. These two here are working together, along with the fact that it's a break-in market structure sitting right on top of what we expect to be a breakaway gap, right? And the breakaway gap, it just doesn't get filled until the algos go take care of some business in the opposite direction, right? So how much business does it want to take care of? I don't know. That brings us to where we are today. Today, we opened up right there after we closed, after we reacted off of that daily void, that's support. The body of the candle respected this daily order block. We just came down and made a bearish fair value gap. So anybody that ever seen me speak on live, I said I would love to see price come back up into this fair value gap, right? Come back up into this fair value gap and then come back down here. I would give it to going up and taking out this buy side liquidity. But if we take out this buy side liquidity, right, then I'm going to be very leery of trying to go short if we leave any imbalance over here on the way up. If just say we open up on Monday, right in line, and push up toward these highs, and we leave a fair value gap in between this area right here, I would be very wary about trying to short in this area. But if we don't take out this buy side, we dilly-dally in here and just get a reaction off of this void, because now this void can act as resistance. This fair value gap can act as resistance. This order block is still in play. This order block has not been serviced yet, right? We didn't get up to the mean threshold of this order block, so he's still in play. He's not resistant yet. That's an active area of liquidity. It's active. It's an active reference point. It's something that the algos will seek to go back to for a reason, right? But these ones that have been taken care of, they now can be resistance. And as you see today, we came up and we stopped where? Pretty much at consequent encroachment on the void. That's resistance. And we still got to get up to the top of this fair value gap right here. So right now, pretty much, we're sort of disrespecting this fair value gap right here because we came well past consequent encroachment with no problem. But we've come to a point of resistance where now we need the algos to tell us what they want to do next. If the algos jump out the gym going up, don't fret, don't be afraid. Why do I say don't fret, don't be afraid? Because we have a daily volume imbalance right up here, right? Remember I told you some liquidity in the sky, right? We have not gotten to the mean threshold of this order block. Resting inside the mean threshold, resting inside this order block prior to getting to the mean threshold, there is a daily volume imbalance that needs some attending to. It needs some attending to. So we can very well get up here, get this volume imbalance, then turn back around. But if we turn back around, if we turn around, be wary if we leave any imbalances over here. Do we know the future? Nah, we don't know the future. But let's use the tools that we have to anticipate the most high probability attack on liquidity. Let's see what consequent encroachment is on this wick. Consequent encroachment on this wick is 403.56, right? The mean threshold of this order block, let's do it the right way. Let's do it the right way. It's 403 even, right? So the mean threshold of the order block is 403 even. I can't get it to snap back. That's going to drive me crazy. There you go. All right. So the mean threshold of this order block is 403 even. Consequent encroachment on this long wick is 403.56. So those are some areas for people who like numbers. Look, Timmy Rogers, when price start moving up, I'm going to be paying attention to these relative equal highs right here, right? These relative equal highs at 423, right? I'm going to be paying attention to this volume imbalance at between 401.61 and 401.97. Let's just say 402. So I'm looking at 423. I'm looking at 402, and then I'm looking at 403. Those are the areas. If we are to slide back down, I want to see some nice rejection, long wick coming off of some of these PD arrays up here to say, we're going to go down for a little while at least. And if we do get a reaction off of this and we get ready to start pulling down, I will bring my attention to any imbalance that we got over here, because we will have to test that before getting back down to this breakaway gap. Any imbalance that's over here to the right of today's candle, we will have to get through that to get back to this breakaway gap that we left. And with that, I yield my time. We've been on here for an hour. I'm going to share the link in the chat if anyone wants to pull up and ask a question, pull up and share their thoughts. Everybody except Robinson is invited to pull up and ask a question, pull up and share their thoughts. Let me go through the chat and see if anybody shared their week, which I doubt, because y'all be slacking. Those just jokes. Love y'all to death. If I made you some money, put one in the chat. I'm just playing. Y'all know I'm petty. Stop ignoring Robinson. I can't do that. Today was good. Saw that. What's up, Big B? Here to learn to share. Spotlight, where you at, baby? Hey, who left that link on the screen? Get off my screen. Oh, Tanisha made some money on her day off. At least you ain't get fired on your day off for stealing boxes. Okay, Sanjay, end of the week positive. My plan worked out, and I hit my swing. I know I'm late. To the party, Sanjay, but congratulations. That's for Sanjay. That's for everybody. Here to learn, share, she teaches pet. She try to go above and beyond. Glad to be a part of a community, like-minded people. Appreciate you for being here, the Russells. Now y'all see why I can. What's up, Zay pulled up later. You welcome. Did not close above the breaker on 116, so came back down. 116, 118, so came back down. What's that right there? You said 116, 118. I don't have a 16th on here. Did not close above the breaker on 116 through 118. I don't have a 116 on here. I got a 117. I got a Friday. I got a 13, 17, and an 18. What kind are you looking at, Michelle? Okay. Nobody got nothing. I yield my time. Hopefully I was able to share something with somebody that was of some value. Instead of just looking through the price action for the day, I decided to go back and look through price action all the way back to 2020, when most of us got into the market to look to see where the market has come from and give us a chance to maybe tap into where we think the market can be going. Appreciate that, Royce 06. You're welcome. Here to learn and share. You're welcome. Say again. Chick-fil-A. The club with cheese meal. The chicken, the deluxe, not club, the deluxe with cheese. No, the deluxe. Open the door. Open the door. Yes, sir. I know. That's what I said the deluxe. Yes. Okay. Yeah, that's all I got, man. As I lost train of thought because they was asking me what I wanted from Chick-fil-A, but do not put off till tomorrow what you can say today. If your loved ones are still with us, let them know. Hey, mama. Hey, daddy. Hey, wife. Hey, husband. Hey, kid, son, daughter. I love you. Don't just say it. Don't just show it. Say it, show it, and confirm it. Because we can do all we want and think we're doing the right thing, and if the other person doesn't perceive what we're trying to intend, it's all for naught. It's for nothing because they're not receiving it the way you think they're receiving it, because they don't perceive it as you showing your love and affection, because you're not speaking in their love language. 5 love language by whoever that dude name is. It changed my life for me and my wife about 15 years ago. I said, aha, that's what I'm doing wrong. Speaking their love language. If your love language is physical touch, but their love language is quality time, don't go over there just touching on them all the time. They may not like that. Just sit down on the couch and watch TV with them. If their love language is all of the above, just do all of the above. Pick some days to bring them a little gift. Pick some days to massage their feet. Pick some days to sit down and watch Netflix. Pick some days to go out to eat. Pick some days to say, oh, baby, you're the best thing since sliced bread. Give them words of affirmation. Speak in their love language so they can perceive and receive what you're trying to give. If you have grown kids like Mark, call them. Make sure you call them. They may not answer like mine unless they need some money. They know how to send them cash out requests. Yes, they do. But still, reach out. Praying for all the Spider gang who's dealing with loss, be it friends, close families. Death has come to visit many of our families. Praying for all those who went through it. Little Timmy Rogers is not exempt. I've lost family members. Some close and some not so close. No one's promised tomorrow. We just had a wicked storm come through here. Thank God, nobody that I know lost life. Some of my wife's co-workers lost property. No one lost their life. The roads was tore up. They couldn't hardly get to and from work up there where she worked at. But no one's promised tomorrow, man. Remember that. Speaking of tomorrow, one of these Saturdays, I'm going to start up doing the Discipline Over Dollars series. I'm just going back through the original Discipline Over Dollars that I did, because I know people don't want to go back and look at videos. They'd be like, Tim, did you do a video on this? I'll be like, yeah, I talked about it then. Did you? I got a playlist for that. Did you? So the Discipline Over Dollars is just going to start from the beginning for an absolute beginner and go all the way through everything that I know, be it for investing, long-term, for retirement, for swing trading, for options trading, for futures trading, to ICT concepts, to how to enter trades, how to use platforms. It's going from this is a stock to I'm flossing on Instagram. That's what it's going to be. And I'm just, instead of pre-recording videos, because that's a lot of work, I'm just going to sit down on Saturday mornings. It's probably going to be, early Saturday morning, sometime before noon, before my family get up and start moving. And I'm going to get on and do a live video for like 30 to 45 minutes so that it can just be saved. I don't want to edit. I don't want to do that. You don't have to try to pop in on Saturday mornings. It'll just be in a playlist so you'll know, okay, the Discipline Over Dollars, it'll be fresh. You can share it with people that's new, that's to it. It'll be fresh, new videos that you ain't got to go back through and try to dig through stuff, because I know people don't want to go back and look through it. I'm going to start at one of these Saturdays. Again, you don't have to try to pop up on Saturday. And like I said, it's probably going to be, sometime before noon, because my family usually don't start moving until about 11 o'clock on Saturdays. We got this emergency horn that go off every Saturday at 12 o'clock in the city. You can hear it throughout the city. They got them posted up in different areas in the city. You can hear. So every Saturday at 12 o'clock, I might be sitting back here doing something on the computer, and I hear it's the emergency siren, and everybody, they just be getting out of bed. It's 12 o'clock. I need to get on up, man. Fix me something to eat. That's my life. Anyway, man, I appreciate y'all. I see y'all, the Spider gang, Black Spider members, and the Gold members. I'll see y'all Sunday at 3 for the weekend chart prep. Go through and mark up the charts and get ready for the next week. Everybody else, I'll see you Monday morning at 9 o'clock for the overnight price action. Y'all enjoy the rest of your night, man. Gone.